In this video, we're going to be talking on the exchange traded funds market and what is it. Now you see, the exchange traded funds are basically securities that have been created to behave the same way as a index. So for example, like your Dow Jones or a FTSE, or a collection of securities, okay, a collection of securities. This could be various securities, it could be stocks, it could be indexes, or it could be foreign exchange. So it could be different types of them is bundled up and is then represented as an exchange traded fund price that you see on the chart moving. Now the relationship that the exchange traded fund has got to the underlying portfolio is basically a linear relationship. So most of the time, this exchange traded funds will move in almost a linear way in relation to the stocks or securities that it's meant to follow or is linked under. Now, one important concept that I just want to leave you with in terms of explaining what is the exchange traded funds is that imagine, for example, the exchange traded fund price is now trading lower than the securities it's bundled under, and an easy trade that you can do to make money out of it is that you can buy this exchange traded fund and then go and sell the security, the underlying portfolio that is linked to, and go and sell it and then lock in the profit for the differential price, okay, for the differential price that there is. Now that is one way that you can help you understand what is an exchange traded fund. Now we move on to the market size and liquidity of the exchange traded funds. The exchange traded funds is related to the underlying security that is linked to. For example, like the SPDR ETF, right? It's linked to the S&P 500 index, which is the top 500 technology companies in the US. Now, one important thing I must mention in terms of this market size and liquidity here is that the ETF liquidity should not be determined by its volume, by its trading volume. Okay, now let me explain why. Because a small ETF with a very small volume can be highly liquid if its security, if its underlying security is highly liquid, right? For example, the SPDR, for example, even though that particular fund, that exchange traded fund, might be of low volume, okay, it's got very low shares of that or low collection of securities of that, but the underlying security, so for example, like the S&P is highly traded, right? It's highly liquid, that will follow with that underlying security liquidity. Now we move on to the price increments of the ETF market. Now, as I've mentioned before in my previous videos, the smallest price increment that can happen in the normal transactory world is 0.01. Now in the UK, what we call that, if you put the pound sign next to it, is what we call the penny. In other markets, this may be known as cents, or in China or in India they call it paisa. So it can be all different terminologies, but the decimal points is always the same. It's 2 decimal points in our normal economic transactions. Okay. Now, when it comes to the ETFs, the smallest price increment that you can do, and what do we call it? We call it cents, because most of them are correlated to the dollar. Alright. Now that we have looked at ETFs, so you should have an understanding now on what is the ETF and the market size and liquidity and the price increments of ETF as well. We trust you enjoyed our Traders Education Center tech video. To unlock the full tech modules for free, click on the link below and hit the subscribe button. Then go ahead to register with your contact details and create your unique username and password to enjoy the fully unlocked tech modules.